All right, today is November 12th. It's Thursday, November 12th, and this is our end of day performance review for the adaptive entry system. Now, during our live trading room session, Aaron and Michael, who are the primary hosts of our live trading room, will share with you the ES, which is the S&P 500 5-minute chart, the NASDAQ 100, which is NQ 5-minute chart, and also the Russell 2000 5-minute chart. Now, we don't generally do a lot of active trading on ES or RTY. We do our trading primarily on NQ. And I want to emphasize that the importance of our demonstrating the adaptive entry system is to help you understand how to interpret the signals. And frankly, if you understand how to interpret the signals properly, by knowing when to go short or when to go long, then you're going to be able to apply that exact same methodology to RTY or ES. In fact, you can also apply it to trading options on stocks or indexes or ETFs. So I'm going to widen this NQ. That's where we primarily focus our attention. 5-minute NQ chart. And what we do is we record each trade in our tracking tool that Aaron created for us. And that allows us to then evaluate the day. It allows us to evaluate some averages, allows us to evaluate overall performance, and it allows us to then take that performance and translate it into a personal trading plan, which will help us see our 12-month income forecast. So that's what I want to do here. So the performance that we track, we're recording the time of each trade, whether it's long or short. We're recording the strategy, whether it's a fractal or a trend bias trade or a continuation trade, etc. And we're keeping track of what the profit loss is on a per point basis. So each point that we record is worth $20. So if we have a losing trade, it's that number of points times 20 on a per contract basis. If we have winning trade, say 5 points is a winning trade, number of points, and we record that as 20 times $20 per point. So 5 points is $100 per contract. So I'm going to just scroll down here because I have people here in our community who want to be able to see the detail. So 7 a.m. was our first trade, and 2:45, 14:55 was our last trade of today. Now we made a decision to close out and discontinue trading just simply based on the overall performance for the day. So if I look at the daily summary, there are two primary categories that we are evaluating for the purpose of translating performance into a personal trading plan. One of them is assuming we're trading 9:30 to noon and taking all 4 of the adaptive entry system signals. And one of them is trading from 7 a.m. to 4 p.m. and assuming that we're only taking the trend bias and trend continuation signals. And we do those 2 different categories just to give you an idea of some of the differences in terms of how your performance will appear. And of course, your choice on how you want to trade is 100% up to you because it is your personal trading business. You're going to have differences from day to day in each category. You know, one day we have maybe a loss in each of those 2 categories. On other days, we might have a loss in one category, but a win in the other category. So we don't focus too much on the individual trades or the individual days. We focus more on what the overall averages are. So I'm going to jump over to our personal trading plan. here in just a moment. Now, I'm actually updating both yesterday and today. So in our 9:30 to noon, we did 30 points yesterday, 13 trades, and today we did 35.25 points, 13 trades. And on our 7 to 4 yesterday, rough day yesterday, we were down 73.25 points. By itself, that sounds like an alarming number, but you're going to see here as I translate this into the personal trading plan that it ends up not being that much of a factor for our 12-month forecast. And that was 21 trades. And then today we have 55 points and 15 trades. So we're going to jump into our personal trading plan. And yesterday, Wednesday, first thing I want to do is to plug in our performance. So I'm going to start with our 7 to 4 category. We lost 73.25 points. Now it's $20 a point, and our personal trading plan has scaled us up to 3 contracts. So yesterday was a loss in that category of $4,395. We did 21 trades. 3 contracts per trade is 63 contracts. And today we did 55 points. So 55 times $20 a point is 1,100, and we did 3 contracts per trade, so 3,300. Profit today, and we did 15 trades. 3 contracts per trade is 45 contracts. Now I'm going to go ahead and lock the number of contracts here so that any other changes we make will not disrupt that. But before I do the evaluation of our 12-month forecast, I'm going to plug in the other category. So yesterday we did 30 points, 9:30 to noon, times $20 a point, and 3 contracts, so $1,800. So we're entering our data here in dollar values, not points. So we take the point value off of our daily summary, and then we translate it into dollars for the purposes of our personal trading plan. And we did 13 trades, 3 contracts per trade, 39 contracts. And then today we did 35.25 points times $20 a point times 3 contracts, 2115, $2,115. And we did 13 trades yesterday, so 3 contracts per trade, 39 contracts. And once again, I'm going to lock in at 3 contracts. Just save that here real quick. Okay, so the very first thing after I've entered my data that I want to look at are these 4 numbers up here. We now have 18.8 weeks behind us on a 52-week financial forecast. During those 18.8 weeks, we've lost 30 days. There have been 30 days that we've lost based on the 18.8 weeks. We have averages calculated here that are winning day averages and losing day averages, and these averages take into account the frequency rate of losses, losing days per week. So these are numbers that Aaron and I have determined a calculation for that allows us to not just look at the pure average of all winning days, but to also take into account the number of winning days or losing days for the number of weeks that have already expired. So our winning day average is 24.14, and our losing day average is 35.38. Those are our historical run rates based on having already made our way through 18.8 weeks. What we now want to do is forecast forward for the balance of our 12-month plan, our 52-week plan. Our future forecast needs to be as close as possible the same as the run rates that we've already established. And the reason is because if you've successfully established this run rate, whether it meets your expectations or not, that is a valid run rate for yourself. That is where your performance is right now, and you should forecast forward based on that same level of performance. I mean, obviously, we have far more winning days than we have losing days, but the rate of losses in this category for us is slightly higher than what we would normally anticipate or what we would actually desire. But at the end of the day, we know that we have positive performance. It's giving us positive overall financial forecast. So that's the run rate number that we're going to use. So I'm going to translate now these numbers into our future forecast. So 24.14 is our winning day, and minus 35.38 is our losing day. So based on a 3-contract max, meaning we will never exceed 3 contracts, we'll never move beyond 3 contracts, that's our maximum, we are looking at an income forecast of about $183,400. Now that's having started with $5,000 in this account and allocating capital based on no more than 10% of the balance of the account. So we're willing to trade contracts that the margin requirement would be up to, but not exceed 10% of the balance of the account. Beyond that, we have applied a limiting factor of 3 contracts. So we'll never exceed 3 contracts. Now you can choose whatever you want. You can change this to 5, 10, 20 contracts, whatever you feel comfortable with. But the way the personal trading plan is built, the number of contracts that is offered to you to trade will never exceed more than the margin requirement being 10% of the balance of the account. So 183,400 is currently the forecast, and we're pretty much locked at that. We'll see how it changes, and there can be changes and adjustments every day. It just depends on how the run rates are looking compared to the actual forecast that you previously had. All right, so same story here. 18.8 weeks, we've had 25 losing days. We've had a few losing days in the past week and a half or so. It's been a little bit more of a challenge. If that is something that puts you off a bit, I invite you to scroll back and look at the personal trading plan and look at all of the series of winning days that we've previously had or small losing days factored in there, and not get discouraged over a very short period of time. If you have just recently started and perhaps this was some of your first performance, I get it. I understand completely. But don't forget that many of these days where we traded late into the day, we're usually trading up until 3 o'clock or later. Many of these losing days had wins early on in the day where many of the members of our community said, I'm done, I'm up 30 points, I'm going to stop, and they didn't incur the losses later in the day. We try to make a practice, and we have a commitment to trade up until about 3 o'clock, be sometime between 3 and 3:30, so that we can continue to gather data and build a database and help you understand more clearly, trading different hours of the day, different time frames, what that performance would look like. So here we have an average for positive days of 33.53. So I'm going to transfer that down here, 33.53. Not significantly different than what we had in there before. Here we have average of losing days of 34.38. A little bit different there, and that's to be expected. I mean, yesterday we had a 77.5 point losing day, and it was on the heels of, I think it was 5 back-to-back losing days. That's highly unusual for us, but Again, we are only 18.8 weeks into a 52-week plan. We have our eyes on the horizon. We keep our eye on our run rates, and let's just be honest and transparent and look at exactly what our income could be based on these current run rates. So I'm going to translate that to our forecast, 34.38 minus 34.38. Okay. And so our 12-month income forecast is now $303,625. That's assuming we trade no more than 3 contracts, and that's assuming that we continue to run at the same run rates. 33.5 positive days, 34.3 negative days, and that our rate of losses, our frequency of losses, is roughly 25 days for every 18.8 weeks. So I'm pretty happy with that. Started with $5,000 again in this that we're showing you, and the forecast is for 303,000. Now, it would be easy to say, no, I'm discouraged, or geez, previously we had a forecast of 370,000. Yeah, but you know what? We're still in the first half of our 52-week plan, first half. So the first half in the plan, you're really determining what your averages are. And the averages are going to vary a bit more from day to day. In the first quarter, the first 6 months, once you get through about 6 months, you're going to start to find that your averages are reasonably close day to day. You're not going to see big swings in your averages. And that's when you really start to understand what your run rate is more soundly. And you start to understand what your future forecast could be. Yeah, at one point we're showing a forecast up about 387,000, I think. So it's come down a bit. But what I like to focus on, first of all, is the averages. Use those because that's your honest way of establishing your own forecast. And I also like to look at the fact that this is a way to start with $5,000, just $5,000, follow the adaptive entry system signals with the help of Aaron and Michael, and end up with a potential forecast, potential income of $303,000. Now, I certainly can't guarantee that that is going to be the income. These averages might decrease. These averages might increase. Whatever happens, happens. We want to want what the market wants. We want to just be almost non-emotional about this and just follow the signals and record them properly in our personal trading plan. And you as a business owner decide how long you want to trade every day, when you want to cut off your trading. And your performance might actually be better than ours because we're committed to just trading for the entire day being up until about 3 o'clock or maybe 3:30. So pretty happy with those numbers. And let's just take a quick look at our averages. If we take a look at our averages, the all signals 7 to 4, where we're looking for a 10-point profit, but locking in 5 points when we have an opportunity, we're averaging per contract about $1,157, just under $1,157. That's a pretty solid number right there. $1,156.94 is the average profit production trading from 7 to 4 for the last 108 trading days. That's pretty solid. Mixed in there are 16 losing days, 16 losing days. All signals 7 to 4. If we take a look at our other category, which is 9:30 to noon, 9:30 to noon, all signals, 9:30 to noon, we're averaging $363.61, 27 negative days during that period of time. So again, pretty solid number for 2.5 hours of work, $363 per contract. You can use whatever multiple of contracts you're comfortable with in terms of your own risk assessment, as well as your confidence level and your understanding of what you're doing. And the other category that we're tracking, which is our trend bias and trend continuation signals only, not trading consensus and not trading momentum, trading from 7 to 4, is averaging $566 per contract. So again, a multiple of those to, to whatever degree you want to increase the number of contracts you're trading. And those are some really solid numbers. And the more data we build, the easier it will be to say we have an extremely solid average rate, and you could trade that with confidence. And of course, like with anything regarding trading, there's absolutely no guarantee that these numbers will hold. But the more data you build, and we're all data oriented, this is all science of the adaptive entry system signals and math of our forecast. The more data you build, the more solid the forecast is going forward, and the look back is a solid number for you to rely on. So one of the features that Aaron built into this trading plan tracking spreadsheet is this feature for us to be able to evaluate any combination of signals. So there's a drop-down box here. We have not yet made this tool available to our trading community, but if you're in the live trading room, you can certainly ask Aaron to do an evaluation. But we can look at all signals. We can look at all signals plus fractals. We can look at trend continuation signals. We can look at fractals only. We can look at a variety of things. And then she built it in such a way that we can also adjust the time frames. Just because we're tracking 7 to 4, or just because we're tracking 9:30 to noon, doesn't restrict any of you to trade only those time frames or only those signals. This is very adaptable to you. It's very adaptable to any individual trader. After all, you are building your own trading business. So if somebody were to say, Mark, I've got a commitment, but throughout every day, but I have time to trade from, say, 6 a.m., which we do actually track starting at 3 a.m. I could trade from 6 a.m. to 9 a.m. So we can very simply tell you, well, what would that look like? 6 a.m. to 9 a.m., and these are Eastern times, trading all signals plus fractals is averaging just under $570 a day. $570 a day per contract. Now, there have been 18 losing days out of the 108 trading days that we've evaluated. Got a 71.6% win rate. Now, if that's right for you, and that's where you want to start your trading, instead of going in blind and having really no idea of what you could reasonably anticipate, we can provide you that information and help you understand, at least based on 108 days of trading history, what you could anticipate from your own personal trading. So we have a lot of flexibility to adjust these values, and Aaron did a great job of creating this tool for us, and as of right now, it's available for us to share with you in the live trading room or during Q&A every other week. So I appreciate you trading with us. I appreciate all of you participating in trading and letting us help you learn how to trade and help you achieve your goals. I think the absolute must in trading is the adaptive entry system. You got to have access to that, and it's either through the live trading room or your own subscription, or both. And the second tool that I think is absolutely critical is the personal trading plan. Without the personal trading plan on a daily basis, you don't really know what your goal is. And where is that goal, or where's that performance for today going to take you? I know right now that if I'm only trading the trend bias and trend continuation signals, if I happen to be somewhere around 30 to 35 points tomorrow and it's early in the morning, I know that I could quit trading for the day. I could, because I know that that value is still on pace to drive me to just over $300,000 of income. If I have a losing day and it's really gnawing at me and it just, hurts me emotionally, because sometimes those losses are really hard to deal with, I plug it into my personal trading plan and go, okay, so it decreased my 12-month forecast slightly, but there's not a significant decrease where all of a sudden I felt like I was on this nice run towards a good income, and now all of a sudden I don't have that. So it helps you even with this whole series of losing days. Look at this whole series of losing days, and we're still on a pace to be somewhere over $300,000 if these run rates continue. So once again, thank you very much for being here. Thank you for giving us the privilege of helping you become an effective, successful, profitable trader.